Welcome back to Creative Outcomes. If this is your first time here, we work with nearly 100 creative agencies and studios, and we bring you the inside scoop and spill the tea on what makes the best the best. Subscribe to our channel and turn on notifications to keep up with our latest hacks. On today's episode, we are continuing with a mini series where we're discussing different types of incentive compensation. If you missed our last episode in the mini series, we talked about sales commission, who it works for, and how it works. On today's episode, we're going to tackle profit sharing plans.
Cool. Thanks, Andrew. You notice Meredith looks a little different today. We have Andrew sitting in. Thanks. So anyways, for today's episode, we also have a guest, client and personal friend. I've known Tony for the better part of 2 decades, Tony Cox. Tony runs an independent wealth management practice down in Atlanta, Sage Mountain. And he's the first guy we turn to for all sorts of questions around wealth building, retirement planning, that sort of thing. So for this particular topic, we thought Tony would be the perfect person to come in and shed a light on some of the things we're talking about. Andrew has described Tony as the kind of guy who knows so much about a topic, he can spend 30 minutes talking about it and feel like he's maybe only spending 5. We don't have time for that. So unfortunately today we're going to get the Cliff Notes version of Tony, but we're very lucky to have him. So Tony, thank you. Welcome.
Yeah, it's great to be here. Honored to be invited. And I think, I don't know, for better or for worse for both of us, it's probably closer to 3 decades at this.
Yeah, the bald hair, I guess, probably gives it away. Yeah, this is probably. All right, cool. Welcome.
So, Watson, we have Tony here with us today. But before we really get him involved, let's set the stage. What is profit sharing and why are we talking about this today?
Yeah, so we've been talking about a bunch of different forms of incentive compensation. Profit sharing, probably the most common one that we hear about in our within our agencies, profit sharing, and I use that in air quotes mostly because I think for the most part, when our clients and even us in some cases are talking about profit sharing, what we're really doing is we're describing what is ultimately like a discretionary annual bonus based sort of loosely or sometimes formulaically on profits, right? Which is cool. We have one of those at Upsource. Annual bonuses are a great way to compensate employees, a great way to incentivize the thing that you care about, profits, and also the thing that enables you to pay the bonus, profits. So it's a good thing. But while we are generally talking about this discretionary bonus plan when we use the term profit sharing actually is a real thing. Like it has a strict meaning within the context of like the IRS and RISA. So Tony, rather than me try to explain it, why don't you help us out and tell us like how do the real profit sharing plans work and like what's the benefit? Why do they exist? Why should I care about them?
Yeah, so I guess without getting too in the weeds, a profit sharing plan it's a type of retirement plan. So like a 401k, like an IRA. It's just another type of retirement plan. And I think kind of we'll get into later what some of the benefits are, but the gist of it is it's a way for business owners and their employees to save more money, either tax deferred or or tax free, depending on if you use a traditional or a Roth plan. A profit sharing is always going to be traditional, but so you're going to get a tax deduction on the business side. It's not going to be taxable income to the employee, and then that'll grow tax deferred over until kind of retirement age, and so there's obviously pretty strict limits on what you can put into IRAs, what you can put into a 401k, and so it's just a way to save more in a really kind of tax advantageous way.
Yeah, that makes a lot of sense. And I know less about this than I wish I did or I should know, but you've referenced as part of this, so again, it's a form of a retirement plan, and you've referenced the concept of a profit sharing plan as a component of a traditional IRA or a 401k. So is that how I should think about profit sharing plans, that they are a component of these existing retirement plans, or are they standalone plans themselves? Like how do those two things relate?
Yeah, so I would think about it as like an add-on to a 401k plan, and so it's again there's limits, and I'll try to quote them here. I think this year an individual can contribute something like $20,500, I think, to a 401k plan. Your employer can add some onto that, but with a profit sharing plan, it's going to be in the same account, so it's going to feel just like a 401k, but again with kind of higher contribution limits. And so if your business has a 401k plan, you may already have a profit sharing plan as part of that, and not even really know it. It's just going to be kind of part of the same documents when you set that up.
So I guess one follow up on that. So it sounds like then, okay, cool. It's an add on to the whatever existing 401k or sort of retirement plan, and it feels like the primary benefit would be the ability to contribute more than you otherwise would be able to, under like the traditional 401k limits. Is that the idea?
Yeah, that's exactly right. So, a lot of plans, there's all kinds of different ways to set up your 401k plans, but a traditional kind of way to do that would be obviously employees can make their own contributions up to a limit. You as the business owner, depending on how that's structured, if you're a W-2 employee or K-1, and that's probably beyond the scope of this conversation, but let's say you're eligible to receive contributions or to make contributions, then there's limits on that. And then the company often is going to have some kind of match on top of that. So that could be, a flat percentage of people's income up to a certain level. It could be a match, and you can figure out for your own kind of situation, what's the best way to structure that and what kind of incentives you want to create for everybody. But a profit sharing plan is going to allow you to contribute more on top of that. So it's going to be an employer contribution in addition to kind of whatever match you're already making. So and the limits are going to be higher. So I think again it depends on your age and it can change a little bit kind of from year to year. But whereas you can contribute as a business owner, you can make an employee contribution of up to about $20,000. I think it's $20,500 this year. In a profit sharing plan, you should be able to get up to closer to $60,000. I think the limit's 56,000 or right in that range this year. So it's quite a bit more.
No, that all makes sense. Appreciate you going into that detail, Tony. I will follow up with a couple additional questions there based on what Ryan had asked. So it definitely clear on the advantages there. It sounds like owners who are part of the business as well as the employees are able to participate in this program. So obviously there's different salary tiers there, and we know that you established some of the thresholds and requirements, but does everyone need to make the same from this plan? And are there any other important things to keep in mind, like discrimination testing, maybe?
Yeah, so discrimination testing is really important, and as part of this, you'll have you'll want to work with a third party administrator to help you do that testing and administer the plan. Assuming it's if you've got one or two employees, it may be something that you could do on your own. But for a larger firm, you're going to want to have a third party kind of experts help you with that, because if you mess it up, there can be consequences obviously for the whole plan. So but no, in a profit sharing plan, not everybody has to get the same contributions. That's one of the benefits. Again, depending on kind of what you're trying to achieve, it's not you can't give every dollar to the owners or to the top couple employees and not contribute anything to your other employees, but you can skew it much more than if you have just say a match of 4% of income or whatever. Like that's 4% for everybody, and that has to be the same for everybody. So and that is one of the ways. So discrimination testing, again, without kind of getting too in the weeds, there is going to be around like how much the owners or the senior employees can have in the plan relative to everybody else. So something to be really thoughtful of, like if depending on the size of your company and obviously how much the owners make relative to everybody else, you can get into what's called a top heavy plan pretty easily. And it's not even about what the company is contributing, but just what the employees themselves are contributing. If you're putting in, the max every year and your employees are putting in $1,000 or something, you're going to run into these top heavy issues pretty quickly, and you're going to have to basically take some money out of the plan to correct that. So there are ways to avoid that issue, and it is the discrimination testing you referenced. You can have what's called a safe harbor plan. There's different ways to achieve that, but one of the cleanest ways is just to make contributions of a certain size. I think about 3%, and don't quote me on that. It change a little bit, but if you make employer contributions to your employees, even if it's not a match, it's just a direct, like we contribute 3%, whether the employees put in $1 or not. Then you have a safe harbor and you don't have to worry about those top heavy rules.
That's really interesting. So, And I don't want to take us necessarily down a rabbit hole, but we've kind of like loosely, as I think about retirement plans and profit sharing plans, there's a few reasons to do them. One of which, let's call it the primary reason, of course, is to provide a benefit to your employees and incentivize folks to come, stay, perform great work, those sorts of things, right? So that's a huge benefit of the 401k, and a profit sharing plan is one of the sort of many ways that you can do that. The other is, we've referenced the idea of owners, and not always true, but often this business is a wealth building vehicle for the owners of those agencies. And retirement plans and profit sharing specifically is one way um, to build and retain wealth in a sort of tax advantaged way. And I, so there is a thing that I've seen, Tony, I know that you have seen, where you have owners that have somewhat of a unique relationship to their business. So rather than, hey, I'm an owner and I individually own my shares in my LLC, what I have seen is, as an owner, I have a personal holding company, right? So I own shares in my personal holding company, and my personal holding company owns shares in my LLC or whatever, and I use that to create, what might be like a personal retirement plan for myself. So, anyways, like any like context you can add to like that strategy for for an owner of an agency who might want to consider that. Like, what's that all about? What have you seen?
Yeah, no. So that's definitely something that's worth looking at, and for a lot of our clients that we work with that own businesses or were owned businesses, and maybe they have a consulting firm like now, or something like that. And as you said, they own that through an S corp. Yeah, you can really take advantage of that. So you have to be careful. Again, there's rules around like common ownership. You can't just say, well, I own 100% of my agency and I have 20 employees. So I'm just going to set up this other business and I'm going to run all my income through there. And that's where my retirement plan is. So I don't have to make any contributions for your employees. It doesn't work that way. But if you're a minority owner, and again, there's different testing rules around that. You want to talk to an expert kind of in that area to make sure you're not running afoul of any of those rules. But yeah, if you think about, you have a business and then you have, say, an LLC or an S corp that owns your share of that business, like that S corp is a business, right? And so it can have a retirement plan. And so you could, again, depending on kind of your overall ownership structure, say, I'm going to have kind of my a retirement plan here this for my S corp, and maybe if you get kind of further down the road, you're an employee there, but then if you have a spouse, they could be an employee of that S corp. If you have kids, they potentially could be. And so that it just creates additional opportunities to have a plan there, contribute again even more. And if that's kind of your goal, to get as many dollars as possible into these tax advantaged accounts, that's a great way to do it.
Amazing. It all really is, all the different pieces that loop in there. Tony, I know we've talked about this topic quite a few times, but I continue finding interesting pieces to take away every time. So really appreciate you always giving explanations and stuff there and answering questions. So even though I know we could talk on this for hours, let's cut it there. If we have owners, though, who are interested in some of the things we talked about today, what would you recommend they do next? Do you have any resources that you could point them toward?
Yeah, so there's some, I mean, like anything, there's some good online resources. Depends on how complicated you want to get. So if you have, again, a business that's just a sole proprietorship, you could potentially set up a plan, on your own using some different resources online. I would recommend looking for it's called a TPA, or a third party administrator. Um, Generally not too costly, and this is their business. This is what they do, so they can help you understand how much you can contribute, even things kind of beyond profit sharing plans, like define cash balance, define benefit plans, a way to contribute even more on a tax deferred basis. And they can help you think through those things and what's the cost and how much would you need to contribute to make it worth it. Help handle the discrimination testing. There's tax filings that are required, which get more complex once you get above kind of certain asset thresholds. So I think that's really the best place to start. There's a lot of different groups that do that. I probably won't name like any specific ones here, but I'm sure people want to ask, will you try and point them in the right direction?
Cool. Awesome. And obviously, if you are in the need for high net worth wealth management, I can personally recommend Sage Mountain and Tony Cox. So, um, anyways, awesome. Thank you. I think that's a wrap. I really appreciate it again, Tony, for joining. Everybody, thanks for listening. Obviously, for more on how to build a profitable, sellable agency, subscribe to our channel. Check us out on social media, Upsourced, and see you next time.